Hello, and welcome to the webinar on the presentation of the Regional Economic Outlook for the Caucasus and Central Asia region by the International Monetary Fund. My name is Nastasia Strashevskaya. I'm the Moscow and Central Asia reporter for the Financial Times, and I'll be moderating today's panel. Before we go on to the interesting part, a few housekeeping items I'll mention. We are being streamed live on Zoom, as well as the IMF website, the IMF Facebook pages in both Russian and English, the IMF Twitter using #CCA. There is simultaneous interpretation available to those joining on Zoom through the interpretation icon at the bottom of your screen. And there is also Russian interpretation on Facebook. I'll say the same thing in Russian for our Russian speakers. Синхронный перевод доступен по иконке внизу экрана для тех, кто присоединяется к нам через Zoom. For those joining us on Zoom, we ask you, if you're not a speaker, to keep your cameras and microphones off at all times. If you would like to ask questions, use the chat box, or if you're joining us via other platforms, use the social media using #CCA to ask your questions. We will have about 20 minutes for them at the end. Now the interesting part. Let me introduce the panel that I'm happy to lead today. We have Mr. Jihad Azur, the Director for the Middle East and Central Asia Department and the International Monetary Fund. We have Martin Galstyan, the Governor of Central Bank of Armenia. We have Murat Kashenov, Deputy Chief Executive at Halyk Bank of Kazakhstan, and Mr. Johannes Lin, non-resident senior fellow at Brookings Institution and former World Bank Vice President for Europe and Central Asia. We will start with Mr. Azur. Mr. Azur, you published the Regional Economic Outlook on the region recently. Can you please share, as we look ahead, what is the economic outlook for the region? And can you broadly outline the challenges facing the region?
Thank you very much, Anastasia. Good afternoon, everyone. Great to see you again this year for our outlook for Caucasus and Central Asia. Let me share with you three slides, in fact, that will summarize how we see the region performing this year. Well, we all know last year was a year of huge successive shocks that affected the region. It's a region that is diversified. It's a region where you have oil production, remittances are important, and tourism as a sector is important. And therefore, after a year where the economy had to suffer a contraction of 2.2% in 2020, we see recovery coming back. And thanks to vaccination, thanks to the policies that were introduced last year, fiscal, monetary, and financial policies, the economy in the region is gradually recovering, and we expect a 4.3% growth this year. What is driving the growth? What is driving the growth is first the policies that were introduced, and were on average equivalent to what we saw in EMs. What drove the recovery is vaccination, although the region started with some delay, and still there is a divergence in terms of vaccination between countries. But the region is recovering on that, and this is helping, broadly speaking, economies of the region to improve. Of course, there are still a certain number of issues to address. Inflation is the one that is worrying most of us because prices have increased and in the region more than on average. And I would say the issue here is food-related items prices of food-related items have increased faster than the rest. Of course, we expect that this increase in prices, this inflation will be transitory, and gradually starting 2022, we expect prices to go down. But this is not guaranteed. The other issue is how this crisis has affected both the economy and the social fabric. And here, what we've tried to measure this year is the impact of the crisis on two dimensions, on the corporate sector and also on labor, to assess the level of scarring and what needs to be done in terms of policies. But if I look at the growth, which in the following slide, we see how the region is recovering, we see that in 2022, we are still below the levels, at least in the majority of Caucasus and Central Asian countries. We're still below what we saw on average in terms of recovery for the emerging markets if we exclude China. But we see a gradual improvement in 2022, whereby not only oil importers, but also oil exporters will catch up. Oil exporters will catch up because gradually their production will increase. OPEC Plus agreement is allowing an increase in output as well as also in export. Yet, I think it's an important issue, and I'm sure that during our discussion today, we will go over that. The recovery will not allow countries to, in fact, recover the lost ground since the crisis. And then this is an issue. Without that, we will see a deterioration in some of the social indicators in terms of employment, in terms of addressing issues of informality, which was one of the challenges for the crisis. And therefore, we need to look at the policies that will allow acceleration of growth. And this is my last slide, the following one, that shows that impact on employment was higher for youth and women, which tells us that the recovery has to be inclusive and has to allow those two categories to catch up. And second, sustainability is important from the macro side. Debt that has increased last year is still manageable, but we all know that market conditions could change, and the change in market conditions could affect the overall macroeconomic stability in the region. My last, and the way I would conclude this year, is the region has made efforts to address the issue of saving lives, to address the issue of protecting the economies. Of course, certain sectors like tourism were more affected than others. Certain economies reacted faster than others.
Recording in progress.
Vaccination is still key, because with vaccination, we can accelerate the recovery.
Recording stopped.
Saving lives. But it's not enough. We need also to have proactive policies that reduce the impact of the crisis on small and medium-sized enterprises by addressing the issue of the 15 to 20%, 25% of corporations that need restructuring. Inflation is important, and central banks, and we will hear from one prominent central banker on the panel, what are the challenges that central bankers are facing. But also we need to think the recovery. It's an important moment, it's a transition, and I hope this transition will be toward a transformative recovery where technology, climate issues, as well as also investing in certain number of sectors that will allow the region to be more connected in the global value chain, will allow the region to recover faster and get the level of growth that we saw maybe 10 years ago. This is where the region stands. It's a fascinating moment, and it's good to see that the region is recovering, but it's still, there is a way to go. Nastasia, thank you very much. And maybe I will come back to answer some of the questions related to more specific issues.
Yes, absolutely. Thank you, Mr. Azur. And now to the prominent central banker that you mentioned, Mr. Galstan. I'd like you to step in and talk a little bit more about the inflation that Mr. Azur has mentioned. The region has seen an upsurge in inflation, as we heard, and that limits the scope for monetary policy to support the recovery. Can you talk to us about what you see as the main drivers of inflation across the region, and how should policy react given the mix of demand and supply pressures on prices? Thank you.
Thank you very much, Nastasia. It's good to see everybody. I'll give you the short list starting from the most important drivers and then elaborate on policy responses. So the main drivers of the inflation at this point are international food and energy prices. So in case of Armenia, this accounts for almost half of the inflation acceleration this year. Exchange rate depreciation since the COVID outbreak. And the third is V-shaped demand recovery, which is outpacing crippled production capacities. This is probably one of the most important topics that central banks should keep their eye on. All the factors I mentioned are obviously closely interrelated and interconnected. The V-shaped recovery of demand, partly due to unprecedented monetary and fiscal expansions, especially in advanced countries, is the root cause of skyrocketing commodity prices. In addition to the first rebound of demand, the so-called financialization of food and energy has significantly contributed to the price behavior we observe. In other words, the enormous amount of injected liquidity inflated asset prices, including commodity prices. This is not a new phenomenon. It resembles the commodity price cycles fueled by easy financial and liquidity conditions observed not in a distant future, like in 2000 and 2010s. In case of Central Asia and Caucasus region, additional pressure on food inflation, especially in recent months, is associated with a bad harvest in Russia, which resulted in high vegetable prices. This is a pure supply-driven inflation. In addition, physical supply disruptions around the world and the fast recovery of demand resulted in large price swings. For instance, container freight rates have surged 3 to 5 times since the early stages of COVID. That, according to some studies, have contributed to around 1 percentage point increase in inflation in OECD countries. In Armenia, the direct effect is relatively small. To our estimates, it's just 20 basis points. One of the reasons of relatively inelastic supply was the closure of many businesses, unfortunately, which did not survive lockdown restrictions and sharp drop in demand, especially in 2020. Essentially, the productive capacity was lost, as Jihad mentioned in his presentation as well, and it's very hard to ramp it up quickly. Depreciation of exchange rate, as I mentioned earlier, has also contributed to inflation through imports. There is, however, a peculiarity here. In some countries of the region, the initial depreciation partly reversed in 2021, but prices did not go down symmetrically. We think this may be due to reluctance of firms to cut prices back because of high uncertainty and the inability to adjust wages downwards. In addition to supply factors, a very quick recovery of domestic demand also contributes to expansion of inflationary environment. And this goes beyond all the above told stories with commodities and supply problems. Essentially, since the early stages of recovery, a faster than expected reduction of accumulated savings have been contributing to the rise of private consumption. This quick revival of pent-up demand has been outpacing the growth of productive capacities as expressed by still low investment activities. Hence, demand factors too started to impact the inflationary processes in many countries of the region, including my own country, Armenia. Let me get to the monetary policy now. Jihad outlined the trade-offs very well. Central banks, especially under inflation forecast targeting regime, do their best to look through the temporary supply shocks. The policy space here is largely determined by inflation expectations, or in other words, credibility. The more credible you are, the less need to act. There is less need to action. This is relatively straightforward conceptually, but very painful in reality. In Armenia, we saw simultaneous price adjustments across the board, even for goods and services, which have very sticky prices and had not changed prices for a long time. This made inflation higher and more persistent and served as a signal for us to tighten well ahead of other countries. I think this forward-looking behavior was very important. We tightened, I think it was December 2020, that nobody else in the region has started the tightening cycle yet. The real conceptual challenge for the countries in the region, the emerging markets in general, are expansionary policies in advanced countries. These are therefore, for example, if we think about the Fed tightening, probably there are two scenarios. Gradual normalization of policy, which may unfortunately trigger capital outflow from the region, and most probably result in tighter monetary policy. For countries with little imbalances, this will be a relatively soft landing. But the second scenario is a bit trickier. Advanced countries keep the pedal to the metal for longer because of fear of damage done by Delta variant or any other type of new wave, or maybe because of political pressures. In this case, inflation and commodity prices will continue rising through asset price channel, and the only way developing countries can counteract this will be by tightening policies and depreciating exchange rates. In addition, history has also shown us that countries in our region prone to global drought and food shortages due to export restrictions by major basic food processing countries. This prospect, I have to say, is not a very happy one. Unfortunately, substantial risk and uncertainty associated with the healthcare situation and uneven vaccination create additional pressure on careful calibration of monetary policy with a close eye on credibility. Thank you, and I'll stop here for this moment. Thank you.
Okay, thank you, Mr. Goldstein. I will turn to Johannes Lin. Mr. Lin, we heard from Mr. Azur that the recovery is ongoing, but there are challenges along the way, and they have to do with repeated infection waves, with low vaccination rates, rising inflation, high public debt, and the risk of tighter global financial conditions. In your view, how is the region dealing with this environment, and what are the main risks you see on the horizon for the recovery?
Thank you, Anastasia, and good day to everybody. And congratulations to you, Jihad, and to your team for once again an excellent report. It's always a great pleasure and interest to somebody who is working in the Caucasus and Central Asia region. We await your reports with great expectation, and once again you fulfilled them. Thank you. The chapter on labor markets and employment, I think, is especially interesting to me this year, and I recommend it to all your readers and to the listeners today. I'm also very happy to participate in this meeting today because, you know, your report focuses on a much broader region than Caucasus and Central Asia. And so I think these events that you then organize to focus on Caucasus and Central Asia especially, I think are very helpful because the region has special issues and it's important to give those special attention. So thank you for organizing this meeting. Nastasia, let me start with your first question, which is how did governments react to the COVID crisis? My sense is, looking at this from the outside, and I hope I'm right, is that actually they reacted relatively well. Of course, there were negative impacts in terms of growth, in terms of social and economic effects in the region, in the countries. But nothing like what happened in the 1990s after the breakup of the Soviet Union. And indeed, the recovery is underway, as we've heard already, with a V-shaped recovery. And in some ways, I think the region did at least as well, if not even better in some countries than did the average, let's call it the average emerging market in developing countries across the globe. And certainly also, I wouldn't say any worse than the industrial countries, the advanced countries in their reaction. So I think overall, kudos in many ways to the policymakers in the region. Let me focus on three specific areas of policy. First of all, in terms of macro management, I thought overall the report shows that there was a balanced approach, and despite all very significant constraints to the policy spaces, and indeed crises, really deep crises, sustained crises were avoided, and meltdowns in the macroeconomic area were clearly avoided, despite the fact that, of course, social and economic impacts and poverty rates were negatively affected. In terms of the second area I want to look at, namely the response specifically in the health area to the COVID crisis, I think here the picture is mixed. Some countries actually, well, specifically Turkmenistan, didn't even acknowledge that a pandemic existed, which is somewhat unique, perhaps, worldwide. In terms of vaccination, yeah, some countries like Kazakhstan and Azerbaijan did relatively well. But overall, I think the region is lagging behind at about 30%, at least where it could be. And I'm saying this because the problem appears to be, according to a recent report by the CAREC Institute, its quarterly monitor actually compares availability and secured vaccination doses in the region with actual delivery. And it shows that actually the secured vaccination doses exceed the actual delivery in terms of the doses delivered through vaccinations, there's quite a gap. So that one must actually look at the quality of the health system overall, which showed considerable weaknesses, I think, as a result of the pandemic, but also, of course, vaccination hesitancy. And that goes back to, I think, what is a fundamental problem, not only in Central Asia and the Caucasus, but worldwide. And this is the distrust that ordinary citizens have in their governments and in the system that delivers. The vaccinations are a very fundamental problem that we all face. A third area of engagement is policy engagement is, I think, that the crisis shows, and looking ahead, and we've heard already some of this, is that the underlying unresolved structural issues that face the region remain to be addressed. The exception here perhaps is Uzbekistan with its rather intensive reform effort over the last 2 or 3 years, which is, I think, very remarkable, and actually will have positive, I hope, spillover effects to the rest of the region. But the key issues that just about all countries face remain limited market size and connectivity to regional and world markets, ineffective public sector and public services, limited scope and productivity of the private sector, and finally, as reported in some detail in the report, the IMF report, structural issues in the labor market. I won't go into the details here because time is limited, and you asked me also to address some of the risks. So the report actually identifies, I think, all told, as I counted, at least probably 7 risks. Among them, sort of the obvious ones that we've already heard about, rising inflation and debt. I will not focus on those. I actually think, given the high quality of central banks in the region, I think actually they are, relatively speaking, manageable. I'm more concerned about the COVID risk. The resurgence right now underway in Russia, in Georgia, Azerbaijan, Kazakhstan, I think are very worrisome and will affect the recovery very likely, and certainly in the short term. I think the weak employment recovery that Rio points to is a serious concern due to apparent changes in the labor market and the sort of differential impact of the crisis on different sectors, which has now resulted in this disconnect between economic recovery, and labor market and employment. This in turn gives rise to, I think, a serious risk of rising inequality, which has risen and will continue perhaps to rise as low-wage earners, young and female workers, and households for these workers continue to be disadvantaged. And finally, this links into security and instability, potentially. Here, of course, we have potential domestic instability because of inequality and social issues, but we also have in the region, of course, the problem of conflict in Afghanistan, which spills over. We have the continuing stresses between Azerbaijan and Armenia, and we have also a history of border problems between Tajikistan and Kyrgyzstan. So one key objective in the future has to be to limit conflict, both internally, but also among countries in the regions and with the neighbors, if recovery is to be sustained. The last risk, which is maybe more a medium-term to long-term risk, of course, is climate change. And with COP26 around the corner, that's a risk we definitely cannot forget. Now, what about major policy changes? Let me close on that, or policy challenges. First of all, there is a continuing need to balance short-term adjustment and response priorities as there are continuing issues and challenges despite the recovery in the short term in managing the economies with long-term restructuring needs. My sense is that cautious macro management in the face of limited monetary and fiscal and debt space will be important, but I think manageable. Continued structural reforms or revival of structural reforms in many countries actually, I think, will be critical. Regional cooperation and connectivity, especially to keep and reopen the borders after the crisis and make continued progress in terms of trade and transit facilitation, will be critical. And here I just want to flag the August meeting of the 5 presidents of Central Asian republics. I thought they focused on this issue, and I think is actually was a positive event. And I think one hopefully can look forward to continued attention to those issues. And finally, I think there's a continued need for external assistance. The IMF, the World Bank, Asian Development Bank, EBRD, all of them, and of course bilateral supporters need to be engaged. And I think, say for Kazakhstan, premature graduation from multilateral support in particular, I think would be a serious mistake. So I hope that will not happen. Let me stop here. Thank you.
Thank you, Mr. Lin, and thanks for bringing up the elephants in the room, such as the geopolitics issues and climate. I'm sure we'll have questions from the audience on those at the end. But before that, one more issue I'd like to touch on with Mr. Kashenov, if I may, and it's digitalization. So for some businesses and economies, it has been a matter of life or death, and those that are better digitalized fared better than others during the COVID-19 shock. Those digital solutions were used to improve the effectiveness of public policies. So, Mr. Kashenov, my question to you is, what can governments in the region do to help firms take advantage of the opportunities offered by digitalization and other technological?
Nastasia, thank you very much for your question. We as Halyk Bank are present across a number of countries in the region. Except for Kazakhstan, we have subsidiary banks in Uzbekistan, Kyrgyzstan, Tajikistan, and Georgia. So we are pretty much understand how the situation was evolving, still evolving across the region. And I found a report from IMF quite interesting, and it's echoing with many things which we witnessing ourselves in our organization. Regarding your question, we as Kazakhstan, similar to many other countries, first faced with COVID in March 2020. And the government immediately decided to put strict quarantine, which also forced many people to stay at home. At the same time, the government decided to support this category of customers through providing for these categories of citizens by providing social payments. And because to receive the social payments, people need either to have accounts in the banks, or simply if they have accounts in the banks, to know the number of that accounts. We faced with the situation that many people actually went physically to banks branches, which is obviously was against the whole idea of putting lockdown. Because a number of banks in Kazakhstan was already quite advanced in terms of digital solutions. Actually, the big job was done between banks and the government in order to go one step forward and to allow full digitalization, including digital onboarding and opening digitally the accounts of customers, so they would not need to come physically to the bank's offices, but do it from their mobile applications. For that to be happen, the government decided to open its databases to the bank and make integration. Hopefully, it was done very quickly. In a matter of 2 weeks' time, I think 5 Kazakh banks were able to offer digital onboarding to customers. And actually, within 2 weeks' time, around 1 million of people used that service, including 500,000 through our bank. That immediately solved 2 things. First, it's increased the financial inclusion to this category of customers who is socially vulnerable. It's solved the solution for the government in order to provide social payments directly to these customers. And actually, for the banks, it was a leap transition in their digital journey. And actually, what we as the bank did, we went further and we reused that solutions already for micro enterprises, for individual entrepreneurs. And this year we offered that solution in terms of digital onboarding to this category of customers. We also see that the way how the government is thinking also changed, because they understood that they can use actually banks' network and banks' competences in order to improve not only the bank services, but also the government services. And we see that a number of banks start providing the government services directly in their applications, like applying for different social payments, like for the birth of the child, registration of cars, etc. And we, as a bank, for example, opened a special department, GovTech, who is actually working on further providing same solutions. So we were talking as a bank as a client journey. I think now the government start thinking about the citizens' journey. Obviously, these solutions are possible when the governments are ready in terms of digital government solutions. The second solution which is needed is the good coverage of internet. And the third thing is penetration in terms of mobile application. So not obviously all countries have same level of advancements across all three areas as Kazakhstan, but we're glad that many countries are moving into that direction. Like, for example, recently, the Central Bank of Uzbekistan also decided to, on a pilot basis, start allowing banks to use digital verification. So we think that this is the way forward for other countries as well.
Thank you, Mr. Kashanov. I will have a follow-up question to you in a little while about the resilience of banks and your views on that. And while you're thinking about it, I turn to Mr. Azur once again. So we hear that countries in the region have to set their policy priorities and they're facing trade-offs. And I want to hear from you what your thoughts on this are. Since your previous report in the spring, policy trade-offs have become more acute, with some countries in the region facing the prospect of a protracted recovery. So how should the countries navigate through these trade-offs to promote a transformational recovery? And how has the IMF been helping the countries in the region ease the policy trade-offs?
Thank you, Anastasia. You're asking important questions. I would say there are multiple levels of trade-offs, that there is a trade-off between what you need to do today in order to stabilize and recover, with the trade-off of the big transformation that will allow those economies to regain level of growth that will be sufficient to provide an improvement in conditions of life, as well as also address some of the social issues. Therefore, for the short term, the trade-offs is how to first keep the focus on protecting lives. We are experiencing a cyclical recovery, it's true, but the increase in number of cases could derail that. And accelerating vaccination is very important in that front. Accelerating vaccination is good, but it's not enough, because you still have the legacy of the various policy support that were provided last year. And the region, I would say, reacted like many other parts of the world with some fiscal, monetary, and financial sector measures. What needs to be done is to recalibrate those. Now it's time to focus on where the acute needs are and gradually unwind some of the measures that are not needed anymore. The second is how to calibrate in the financial monetary arena. And then Martin mentioned that earlier, as well as also Murad, is you still need to help the corporate sector to recover, which requires to still provide some or maintain some of the financial assistance that you have provided. But at the same time, inflation is there. And then certain number of central banks have already initiated the hikes in interest rate. Therefore, this is where knowing very well your markets, having good analytical capacity at the level of central banks, and good level of coordination between fiscal and monetary agencies, between ministries of finance and central bank, will play an important role. Financial sector, banks in the region entered the crisis with a healthy situation, good level of liquidity, high level of solvency. We tested the system back in April to see how they could react and withstand the shock. We're satisfied by that, but still, when you have scarring, especially in certain sectors, you need to assess the impact of that on the balance sheet of the banks, which requires from the central banks to be vigilant on that. But While doing this, you need to think the future. COP26, mentioned by several, requires investment in new technology around climate change. There are opportunities in terms of changing the region from being a corridor to becoming a platform in terms of a trade global value chain. We are seeing more containers using the railway from China to Europe, which is an important development. But this is something that requires to create an additional value add around it. We need still to recover on certain sectors like tourism. Therefore, those are important elements. What also we need to understand that this is a region that is young and the youth are tech savvy, and the potential for them to grow in technology also would require some investment. Therefore, the matrix is getting more complex than before, and policies are becoming very important, which means that policymakers need to be more active. And at the regional level, I think several mentioned it. Johannes has mentioned it, but we all agree on that regional cooperation now is a must to make sure that the market can be created within the region and the region can come together as stronger platform. Last but not the least, I think what we have, and this is the role of international institutions, what we saw during the crisis, that when you work collectively, you succeed better. We as an institution, we came very quickly last year. As you know, we provided support to many countries. The first that went to the board for rapid facility was a country from Caucasus and Central Asia, Kyrgyz Republic. We adjusted our programs for Armenia, for Georgia, for others in order to make sure that we calibrate our support to the needs of the region. We have now a new technical assistance that I hope this will be not only a place where we provide support to the high civil servants of the region, but to become a platform for peer-to-peer policy discussions. We as an institution, we consider that it's not enough, or challenges have changed. This year with the SDR allocation, we hope that this will provide central banks with additional buffers, but also for countries where you need additional liquidity, this liquidity can be used. Going forward, I think we and others need to bring to bear to the international community the importance of the key topics that are relevant to the region. And this is something that a dialogue like today will help us with.
Thank you, Mr. Azur. Mr. Kashanov, back to you. Mr. Azur just said that banks entered the crisis with healthy balance sheets and good liquidity. But what do you think as policy support is withdrawn? How do you assess the risks of weaker corporate banking systems best support the private sector's recovery from the crisis?
Mm-hmm. Yes, indeed. When the COVID crisis hit us, we make assessment how much of sectors have exposure either to strict quarantine or at that time also to drop in oil prices. So for Halyk Bank, it was 15% of large corporates. But since the oil prices has recovered, so we think that the segments which is still exposed to some kind of lockdowns is only 5%. On SME, it's obviously large. It was something close to 20 or 25%. And on retail, 15% of customers were eligible for payment holidays, which central bank instructed banks to do back in 2020. We see that with the passage of 18 months, the situation improved substantially. And there is almost none of retail customers who are still on the payment holiday. For SME, there was a couple of more extension of the program, but currently it's less than 5% of the portfolio, of SME portfolio. And for large corporates, I think, except probably for very small number of customers, the situation is indeed materially improved. So from that perspective, I think that situation is indeed probably close back to normal. It's obviously not a normal situation yet. What we can do as the banking sector going forward, while we see that the government support programs is gradually being mistaken, it's already true for large corporate, we see same start happening for SME segments, I think is start better understanding the customer business. make quick credit decisions, provides support in terms of making lives of customers easier by, for example, putting solutions which might improve their sales, like providing certain analytics, which we as the bank are gathering currently a lot thanks to digitalization. And also, actually, quicker credit decisions is also being possible now with all the solutions which the banks are introducing and which I covered previously.
Thank you, Mr. Kashanov. Mr. Galstyan, turning to you. As history has shown, the region is vulnerable to volatility in international capital markets because its domestic financial markets are generally underdeveloped. What do you see as the key reforms to spur capital market development across the region and reduce this vulnerability?
I think the development of domestic capital markets is a priority in the region. This reflects not only the reduction of vulnerability of volatile capital flows, but also the necessity to strengthen the resilience of financial markets in general. The three main components I would like to mention here are expanding the investor base, both local and foreign, expanding the pool of instruments available, and the third, encouraging large corporates to adopt higher standards for corporate governance and eventually obtaining international ratings. Local investor base, especially institutional investors like pension funds, play a central role in this respect by providing stable source of financing. By the way, assets under management of pension funds will reach almost $1 billion at the end of this year in Armenia, from which probably 10% is invested in corporate market instruments at this point. Foreign investors are as important because they deepen and diversify the pool of capital available for domestic financing, increase competition to the benefits of domestic issuers, and finally spur improvements in transparency and governance of domestic companies. Advanced clearing and settlement infrastructure linking to the global security depositories like Clearstream is also critical. This allows seamless entrance to foreign investors to local markets. Efficient functioning of capital markets require also sophisticated financial products, such as hedging instruments. The variety of derivative instruments is an important prerequisite for attracting foreign liquidity into the domestic capital market, especially when foreign players invest in local currency, debt, or equity securities. This is an important priority to facilitate the entrance of foreign investors and expand the investor base while decreasing the associated volatility. At the same time, domestic institutional investors, such as pension funds, will greatly benefit from a bigger pool of instruments while contributing to the financing of long-term large projects. For example, infrastructure projects financing based on future cash flows through the capital market has a great potential to this end. Next important priority is setting best corporate governance standards, accompanied with higher, transparent, and endorsed by international ratings for corporates to facilitate their access to capital markets. Our recent experience shows that consistent action brings about the desired result. After a long cooperation and productive discussions, some large private sector companies have already initiated ratings and entered capital market with success. While countries might prioritize different components, I strongly believe that a coordinated process of parallel development of these three aspects of capital market, accompanied by a well-designed agenda of capacity development in regulation and supervision, had the highest potential to success. Thank you.
Thank you, Mr. Galstyan. And Mr. Lin, now to you. I want to talk to you about the public sectors, which is another challenge in the region. They've been inefficient in several countries. How, in your view, can governments work to enhance the provision of public services, make them more transparent, inclusive, and efficient while supporting a dynamic private sector?
Thank you, Nastasia. This is a vexing and very long-standing challenge, I think, in the countries of the region, and there's no silver bullets to how to improve public sector effectiveness and functioning, especially in the context where overall governance and the political framework of the countries remains what it is. However, I do think there are four practical suggestions that I can make that I think could lead to significant improvements in the way public sector functions. First of all, professionalizing civil service in the government administrations, I think, remains a big challenge and I think an opportunity. Now, we do have high quality of administrators and ministers and deputy ministers and department heads in the upper echelons. And of course, central banks are kind of in the region are an example of what effective professionalization and professional cadres can do. But the reality is that at the middle and lower levels in many ministries and departments, there are still considerable weaknesses. And so introducing and pursuing, ensuring merit-based hiring and contracting, competitive pay, 360-degree feedback, including from recipients of government services based on clear metrics of client and service delivery, I think are an important element of professionalizing civil services. Second, e-government, and here, of course, Mr. Kashanov already led the way in a way in terms of indicating that there are tremendous opportunities and reinforced, of course, by the COVID crisis. However, as we know, this requires high quality internet connectivity and also investments in systems, infrastructure, and actually education and outreach to the more remote areas and the more disadvantaged parts of the population in order to ensure that increased connectivity, internet connectivity and access to government through e-government services doesn't actually increase inequities. I also would flag that it's important to keep in mind privacy issues, security, internet security issues, and public trust concerns, and including perhaps also making sure that Chinese firms don't have monopolies in the way internet and communication services are being provided in the platforms they provide. The third area is, I think, and really important and critical, is I think what is needed is a transparent interface between government and the private business. That is in contracting, in regulation, and in tax and subsidy. So what's required is that these interfaces have to be rules-based, by type of firm, by sector, and by type of activity, not by individual firm. What you need is a competitive, transparent, predictable relationship between government and the private business, not discretionary, not behind closed doors, and not unpredictable. Now, that's a tall order, but actually, you know, there are good practices in terms of, for example, public procurement, which could be adopted, international standards could be adopted by countries, and in fact should be adopted. Let me finally mention one area which I think gets neglected by just about everybody, and it's a hobby horse that I'm pushing quite often when I talk about particular infrastructure investments, by the way, not only energy and transport, but also health and education infrastructure, hard infrastructure. And this is that operation and maintenance of physical infrastructure is seriously neglected in the region, as, by the way, it's in other countries also. Think, for those of us in the Washington metropolitan area, the recent stories about the metro subway here in town. So it's a serious issue that is systemic. And if you want your investments in infrastructure, often paid for by debt to, for example, China under the BRI, the Belt and Road Initiative, you better make sure you have in place operation maintenance practices that actually ensure that this infrastructure is effectively maintained and effectively operated. Let me stop here.
Thank you, Mr. Lin. And now, since we're running out of time, I'll turn to the questions from the audience. The first question we have is from Mir Said Ibrahimzadeh about Azerbaijan, and it's for Jihad Azur. Mr. Azur, do you see the recent surge in energy prices as a potential booster of economic recovery in Azerbaijan? And how can the government cushion the outcome of rising inflation?
Well, thank you very much for this question. I think it's an important topic that this is not only important for Azerbaijan, but for oil and gas producing countries. Let me start with Azerbaijan. Of course, last year, the authorities have introduced a certain number of measures to cushion the impact of the crisis, and they combined fiscal as well as also monetary measures, adjusted their interest rates and so on. And like other oil exporting countries in Caucasus and Central Asia, the presence of buffers allowed them to cushion the impact of the crisis on their economy and to recover faster. This is also was the case for Kazakhstan. And Murat was in his comments explaining what has been done there. The issue I see is, well, first of all, in terms of recovery in oil price, this will be gradual, because as you know, the OPEC Plus agreement has led to a limitation on production and on export. Those limitations are being lifted gradually. But I would say it's very important for oil and gas producing countries to use this moment not to go through the traditional boom and bust approach, whereby as soon as oil prices go up, we or countries starts to relax their guards and then become even more pro-cyclical. This would have a negative impact on the economy over the long term. I think we have an important moment for the oil exporting countries to use what we are seeing today as a new cycle of pickup in demand that is lifting oil prices up as a way to accelerate transformation outside the energy sector. And this needs to be done by investing in three dimensions. One, in diversifying the economy, promoting further growth in the non-oil industries. Two, accelerate also the diversification of their fiscal revenues, which is also an important dimension. Reduce the size and the weight of state-owned companies in the economy to allow private sector to grow faster. And three is to use the need to invest in reducing carbon emission, in moving into clean energy as a booster for them to stay in the energy market, but not in the fossil fuel type of energy market.
Thanks, Mr. Azur. Now we have several questions for Mr. Kashenov from Andrei Osnes of Совкомbank in Russia. The first question to you, Mr. Kashenov, is how traditional Kazakhstani banks are going to compete with neobanks such as Kaspi in the region. Despite its size, but thanks to high profitability, Sberbank of Russia manages to compete with Russian digital banks by investing billions into IT. Do large banks in Kazakhstan have this ability? And one more question. How did the results of AQR held by NBK in 2019 influence the banking sector overall and Halyk Bank individually? Overall, how COVID affected the banking sector in Kazakhstan? What is the status of financial sector reforms? There you go.
Yeah, thank you. First of all, about the neobanks. Actually, in Kazakhstan, there is no, let's say, neobanks in a way that's from other countries like in Europe or United States. Actually, Kaspi, us, and several more banks actually are large banks which quickly shifting from traditional banking into more digital space. Some have more focus, like, for example, Kaspi, which is dedicated consumer bank. And so we are a more universal bank. And what I said in my previous speech is that we providing digital solution not only for retail customers, but also for other categories like private entrepreneurs. Now we working on digital solutions to medium and even large corporate customers. So in my opinion, the competition is not between traditional and new banks in a way that one might know from other countries, but between banks who have capacity and resources and competence in order to quickly transition into digital space, and those who do not have these elements. So basically it's between larger banks and smaller banks. And I think the consequence is that we are seeing that larger banks became more advanced, more larger, and I think this is same as you see probably from other sectors of economy. In terms of AQR, I think there's a big job done by the Agency for Supervision with the help of consultants. They did a comprehensive AQR a couple of years ago. I think it was timely, just results were issued before COVID crisis. I think results were quite satisfactory. There are a few banks for which additional capitalization was required. The results were quite public. These banks had certain agreements with the agency in order how to bring their capitalization to the required level. But otherwise, I think the overall sector went well. What I also want to mention is that everyone probably knows that the Kazakhstan banking sector was severely hit during global financial crisis. And at one point of time, Kazakhstan was even, I think, champion in terms of bad loans. I think NPLs were more than 30%. I think the great job was done by the supervisors by cleaning the banking balance sheet. We had more than 40 banks 10 years ago. Now we have just above 20, and many banks either lost their license or they merged with bigger banks. So from that perspective, I think the banks were quite ready to face new challenges. And as we see the results now, I think the banks are in good shape, which is also a witness from rating upgrades, which happened. We actually, as Halyk Bank, had upgrades from all three rating agencies now, and two of them are now rating us at the investment grade. And I think recently S&P also mentioned that they're ready to look into better assessment of the banking sector overall, which is, I think, quite a change in the tone.
Excuse me.
Thank you.
Would you allow me to add a few comments?
Sure.
Hi, my name is Madina Bulgasimova. I'm the chairperson of the Agency for Financial Regulation of Kazakhstan. I'm excited to be a part of this discussion. And I just wanted to add a couple of points with regards to your question. It is true that after AQR, the AQR revealed that there is a significant buffer of capital in the banking sector. And it was a necessary cushion before the pandemic hit. But it is important that even during 2020 and 2021, the bank continued, all banks in Kazakhstan, they continued to provision non-performing loans in a manner that was done during AQR. So the capital adequacy of the banking sector of Kazakhstan is 20% right now, K1. And it is important that this legacy of stressed assets that was accumulated during the past decade was fully resolved. And I would echo the Halyk Bank that in terms of the stressed assets, 6.5 trillion tenge of stressed assets were written off during the 5 last years. 8 banks lost their licenses. So currently the banking sector of Kazakhstan is represented by 22 banks. And we already passed the stage where the banks were trying to fulfill the capital adequacy requirements or took care of writing off of NPLs. We are now in a phase of growing competition among banks on fintech, on development of digitalization of their processes, and competition on different fintech products. And you're right to say that, of course, Kaspi Bank, it's the largest right now company in Kazakhstan, Kaspi KZ, which went to IPO last year with capitalization now more than $22 billion. The largest company, not only in Kazakhstan, but one of the largest among fintech companies in the world. And there is a growing competition among large banks like Halyk Bank and Sberbank and other first and second tier banks in terms of digitalization, in terms of development of the marketplaces. In that sense, I would like to note that it is also important as the regulators to start regulating these new ecosystems that are being built around banks. And there is a big project right now going on in Kazakhstan between the National Bank of Kazakhstan and the agency and the financial sector on development of this necessary regulation of ecosystems and which are based on new fintech and on new technologies. Thank you very much.
Thank you so much. And although we have a few more questions, I'm afraid we have to wrap it up here. So I'll just thank everybody, all the participants, for all your interesting views. And we look forward to the next outlook by the IMF. Hopefully things look brighter next time we meet. Thank you. That concludes.
Thank you.
Thank you.